Hello and welcome back to Cryptocurrency Trading, Mastering Scalp Trading Strategies by Wealthy Education. In this video, we'll take a look at hammer and hanging man candlesticks. So these two candlesticks are actually the exact same shape. Go ahead and draw it out for you. Basically, you have a very small body, and then you have a long tail to the downside. Go ahead and change that. There we go. And then you have a short or basically non-existent, almost non-existent top. Now the body is small. It's either unchanged or close to it. Now think about what's going on here. Number one, you can see why it's called a hammer. There's your handle and there's your mallet. So think about what's going on here. During this candlestick, when you have traders short the market, it initially falls, right? But then it turns around and all of those traders are now worried about losing money. So let's just say this is a week. So during this week, they were selling, and now the market's turned around and is showing signs of resiliency. And if we break the top of this candlestick, anybody that's short in that candlestick is now losing money. It shows a reversal. The same is true if you're in an uptrend in what is known as a hanging man, same exact candlestick, and you see the market start to fall. Well, if the market starts to fall, as we rallied, it fell, and then the buyers came back, showing that we should see a continuation. Breaking down below there means that the sellers have shown real resilience and we start to fall. So a hanging man is at the top of a move higher and a hammer is at the top or at the bottom of a move lower. They are reversal signals. Because of this, a lot of traders will pay close attention to it. And as you can see, like on this daily chart here, there's a nice little hammer there. We fell, a hammer, broke above it, went long. The idea would be put your stop loss on the other side of the candle. If it's a hanging man, then you put your stop loss on the other side of the candle and you sell on a breakdown below the bottom of it. Basically the idea is to figure out who's trapped in the trade and then take advantage of that. So let's go ahead and start to look at shorter time frames. Go down to the 5-minute. Now, like anything else, technical analysis related, shorter time frames are not as reliable as longer time frames, but they can be used if you know what you're doing and you're nimble enough. Like this hammer here. Notice it's a white body. It could be white or black, doesn't really matter. But notice how it forms right there at support. Break above it, you got your stop loss underneath it, you have nice volume. It's a sign that we are, in fact, going to go higher. You could make an argument for this being a hanging man. Technically, it fires off here. Your stop loss would be up there. So the question is, did it break down and then break higher and then break down? But at the end of the day, it all comes out the same. So that is technically a hanging man. As I go through this chart, there's a hammer there. Hammers seem to be more common than hanging man candlesticks. There's a hammer there. You can see right at support. They're nice signals because if you break the bottom of the hammer, like if you just say you decide to go long here on a break higher and you break the bottom of that, it's done. You're out. You get out. That's the end of the story. You take your small loss and leave it at that. Let's go ahead and change point over to Ethereum. Great looking hammer. See if we can find a hanging man pattern. Like I said, they're not as common. You could kind of make an argument for that one, but I would rather see it at that candlestick. There's a nice one right there. So notice how, like in the last one we looked at, So notice how we broke above and then broke down below there. So not only did it sucker people into buying there, but then it broke higher, suggesting that we were going to continue to go higher. And then 10 minutes later, broke down below the bottom of this candlestick. Everybody in this candlestick that had bought Ethereum, now losing money. And it basically went down to where you would expect. Let's look at another couple of examples. So Binance, you can see a nice little hammer there. Took a little while to take off, but it did. It went up to this resistance barrier. Let's see here. Okay, so here's an example of a hammer. Not as compelling as you are drifting lower. And there's short-term resistance just above. It's not like a sudden sell-off and a recovery. And you know, like I said, for that matter, they don't always work out. Nothing is 100%. You're just putting the odds in your favor. I see a ton of what are known as shooting stars, and that will be in our next video. Really at this point, I mean, these are reasonable. There's like a hanging man there that actually, this is an example of one that failed. You would short this hanging man on a break below it. You would have your stop loss somewhere in this area. And it started to work out and it shot up against you. You know, sometimes it is what it is. They are not 100% reliable. Nothing is. But that comes down to putting the odds in your favor. You know, that's why we throw indicators on and support resistance, etc. So in the next video, I'll actually show you how you'll use these candlesticks to your benefit. Hello and welcome back to Cryptocurrency Trading Mastering Scalp Trading Strategies by Wealthy Education. In this video, I'll take a look at some examples of scalping using the hammer and the hanging man. So right away, the first thing I see on this Ethereum chart is this beautiful hammer here. Now, what I like about this hammer is volume picked up, nice long wick. So if we do break above the top of it, there are a lot of people buying back their position. Another thing that you can take a look at, and we'll see if this actually is the case, the Bollinger Bands. So we broke down below the bottom of it, and even though we jumped back into the Bollinger Band, we are right at the extreme low. So it does make sense that sooner or later, you are going to see a bit of a run higher. Let's go ahead and put our MACD on. You can see that there's a cross in the next candlestick or so. From an oversold condition, makes sense that we go up here to this resistance. Your stop loss is down here. You get in here. Pretty much a 2-to-1 trade. Nice and straightforward. Kind of layup there, as it were. So when you look at crypto, you have to keep in mind that the volatility profile is much higher than other assets. So that is why you need to be so diligent about finding multiple reasons in a trade. Now, that's going to be true with any asset, but it is particularly true in crypto, as it has a bad habit of finding a lot of FOMO or just FUD, as crypto traders call it. Basically, it is probably more psychologically sensitive to behavior than most, if not any asset that I can think of off the top of my head. So make sure you line up a lot of reasons. There's an obvious one. I think I pointed this out in the last video, actually. Moving average is crossed right after we got the signal of a hammer, right at support in Bitcoin. Went right to where you thought we would, and then even further. Nice volume spike right there as well, so no reason to be shy of trading it. So a lot of times you get these candlesticks. Now, that would be a hanging man if it broke down below it, but once you bounce up a bit difficult to call it that. And a lot of times that does mark a nice selling opportunity later, I'll break down below it, but calling it a hanging man, it's probably a bit of a stretch at that point. And like I said, hanging man candlesticks are not nearly as common as hammers. For whatever reason, that does seem to be true, and that seems to be true across all asset classes. This is an interesting one. So see this massive sell-off. We bounced up into the moving averages and then came down here, an area that has been support previously, broke above the top of this hammer. And what I like about this one is you could have gotten long right here with a very tight stop. And then once you got this explosive move, kind of carries on with the rest of the trading move, and then sets up a new upward trend. Again, could have been a hanging man, but with that kind of bounce, I think that negates that. Now, I do think that's a sell signal, but to call it a hanging man, probably a real stretch at that point in time. When I look at the charts in crypto, to me, it's obvious that you also have liquidity issues at times. So you'll see these weird, strange, like sudden jumps. Here's an interesting setup. So this would technically be a hanging man, and that would technically be a hanging man. And it doesn't matter if you base it off this candle or this candlestick, it came out the same. So once we break this area here, which also happened to be the 9 moving average, we just fell off of a cliff. With that, your stop loss is up here. Your target was probably there, quite frankly. So it looked like this, basically. And then your entry is like right here. So that in and of itself would be an excellent setup. Now, if you manage to ride it all the way down here, of course, that's an excellent trade. But the risk to reward was 3 to 1. So if you're risking $1, you should gain 3. And that's really what you want to see. You want to see at least 2 to 1, if not 3 to 1, if you can find it. And it's probably worth noting it's easier to get higher multiple risk to reward if you trade with the overall trend. So for example, like this, so Polygon was falling for a while and formed this nice little hammer here. But your risk to reward was, unless something fundamentally changed with the market, was never going to be astronomical because you're fighting the trend. Yes, there was a little bit of money to be made there, but it didn't work out. Like the best hammers will be after a move higher and then a pullback, generally. Just because it shows that value hunters have come back in. Now, there's a hammer there, which also happens to be a huge, massive double bottom. So that's something worth paying attention to as well. Crossing the MACD, break above the top of it, you would have to expect trouble there. So when you take these types of trades that, let's face it, is essentially a trend change, although it is backed up by a double bottom, you have to be willing to put up with a little bit of pain along the way. But that thing really took off afterwards. And as you can see, it's pretty straightforward candlestick pattern. That's why people like them. They're simple. With that being said, let's take a look at the exact opposites, which are known as inverted hammers and shooting stars.